And the question of the day is, when does it make sense to accept lower returns in exchange for predictability? Hi, I'm Fred. Here we talk about business, investments, training, and real life, all from my own personal perspective. This is a very personal question because here we are talking about something serious: the money you save every month from your work, from your effort, from your daily life. So, this needs to be discussed with responsibility. The real question is, when does it make sense to take more risk instead of choosing something predictable? Let me share my personal experience. I've tried risky investment strategies extensively, pretty much everything you can imagine: day trading, tape reading, technical analysis, options. I tried all of them. And this is important to say clearly: none of them worked for me. Not because I didn't try hard enough. I tried for a long time. I spent almost a year with tape reading, another long period with technical analysis, even more time with options. And the pattern was always the same: little losses, month after month, consistently losing. Thankfully, I was cautious. I never risked too much money. My mindset was, I will start small, learn, and only increase capital once I'm really good at this. But here's the hard truth: I never reached that point. I just kept losing. Now, risk doesn't exist only in day trading. When you pick individual stocks, you are also taking risk. Even when you invest in indexes, which is my personal choice, there is still risk involved. The only truly predictable investment is fixed income. And here in Brazil, fixed income pays very well. So, for many people, the real question might actually be the opposite: when does it make sense to take a risk instead of staying predictable? Because if you are earning something like 15% a year in fixed income, it's fair to ask, why should I take more risk? That's a valid question. But here's the nuance: Brazil has high inflation. And I'm not just talking about official inflation indexes like IPCA. Those are averages. Each one of us has a personal inflation based on our lifestyle, our habits, and what we actually consume. And my personal perception is this: real inflation feels much higher than the official numbers. That's exactly what fixed income pays so much here. It reflects higher risks and higher inflation. So, sometimes you are just trading six for half a dozen. Now, where does real upside come from? From variable income, but only if you do it in a way that lets you sleep at night. Comfort matters. Let me give you my own example. I started investing in real estate more than 20 years ago. Over time, I built a solid base. And because of that, I often ask myself, should I sell everything and move all this money into the stock market? It's a seductive idea because real estate is passive income, but not 100% passive. There is maintenance, tenants, contracts, unexpected issues. Sometimes nothing happens for years. I have contracts that lasted more than 15 years. But when something happens, you can't postpone it. You have to deal with it immediately. Even after talking to many financial advisors and professionals, no one could responsibly tell me that selling everything and moving fully into stocks would clearly put me in a better position. So, here's what I do today. I invest the cash flow that comes from the real estate, not the assets themselves. Think of it like two structures. One is the real estate, the other is what real estate produces. And that second one goes into variable income. That feels comfortable for me because with variable income, there is one rule you must respect. It's like a roller coaster. You cannot jump off in the middle. If market swings make you anxious, if you can't sleep at night, if volatile bothers you, then variable income is not for you. And that's okay. Fixed income and real estate can absolutely build wealth. And sometimes they are even better choices because when you are not emotionally consumed by market fluctuations, you can focus on what truly matters: your work, your income, and your monthly contributions. Returns matter, but contributions matter more. If you are comfortable with variable income, that's great. I personally think it's powerful, but comfort comes first. You need to put your head on the pillow and feel at peace with your decisions. I really like to know what you think about this. Leave a comment below. I read and reply to all of them. Thank you, and I'll see you in the next video.